Okay, recording this video Sunday, 15th of May 2011, Sydney time. Hope you had a great week's trading. Actually going to show you a setup from Friday's trade, but before I do that, I want to show you kind of my daily charts on the E-mini. I think we're at an absolutely critical juncture in the market, and we're going to break, and we're going to break big. My assumption is we're going to break to the downtrend, into a downtrend here, but having said that, this market has just continued to power on. And I'm not sure who's buying at these kind of elevated levels, but someone obviously wants to keep the game going, if you like. Talked about these levels over the last few days at 1335 and 1315 being absolutely key, and you can see the last 3 days we've just been batting backwards and forwards between these levels. We break out by a point or two, maybe kind of reverse, go the other way, and so on. So Wednesday's trade, we kind of had exhaustion selling, kind of set the bottom, we kind of rallied from there. We had this kind of exhaustion buying pattern, white then red bars like this, and then Friday we just couldn't break through. The market did not want to break through, and it came back down into those lows. So let me show you what I'm seeing on my chart. So this is a daily time frame of a better sine wave. I've used the @ES contract, not the @ES.D. .D is just the days only. This is using the day and the night session. Using the day and the night because it just prints this end of trend pattern. We didn't get quite as clear a signal as we did on the @ES.D contract. But the importance of this, I talk about end of trend and second cyclical turns after end of trend as being kind of critical points where we get changes in trend potentially setting up. So here's our end of trend, and here's our second cyclical turn after end of trend. That's a breakout signal here. We kind of go beneath it and we kind of test back up. We've now on this time frame formed, you can see here, a support level which is 1328.50. Now that level is absolutely key. If this is the start of a change in trend, we'll drop below that level and we'll move into a trend move on the daily time frame, which is very significant. We've not seen one of those for an extremely long time. You can see, this rally has just kind of kept us going all the way up into these highs. Now the reason why we potentially could see that move is because we're starting to see less and less buying activity. So this is better momentum again on that @ES contract. This is using a 1440-minute chart, which is a daily chart. TradeStation kind of wrinkle here. If I use that, I can actually get into the tick-by-tick kind of data, and it can actually give me a better plot of better momentum here. So you can see this entire move kind of sets off. We kind of have a flush signal right down at the bottom here. All these blue professional bars kind of coming in at a support level. We have exhaustion buying to start with. This kind of sets the move off. So this is kind of extreme buying that gets us going into this up move. We kind of slow down. The first time we slow down in November, we get some bearish divergence patterns. We kind of just sell off into a pullback and an uptrend. But because we've not kind of had exhaustion buying at the end of the move, the move's unlikely to be over. We get a second pulse here of buying volume that kicks us on through the 1200 levels, bang into these highs. Now this time we come into these highs and we do actually start to see some slowdown in the activity. We get a flush signal here which is flushing out the buyers up at this point, and then we get all of these little amateur bars right up in the highs, up at 1300, above 1300, bearish divergence signals, and we sell off, and that was the March kind of sell-off that we had. Coming into that, we hit support on a pullback in an uptrend with a whole bunch of blue professional bars kind of coming and exhaustion selling up, leading this move down, bottoms out with some bullish divergence patterns, and we bounce back up. Now we bounce back up into end of trend. The first time we came in, very weak buying. You can see this kind of compared to the whole move. Bearish divergence signal here, and we roll over. Little blue professional bar kind of comes in, supports the market. That was the 1292 kind of low, and we kind of batted on through up to the 1372, which was the Bin Laden high kind of up here. But a couple of things going on. First of all, we come back in, seemingly get a little bit of support with some blue professional bars kind of coming in here. But this last little push back up into 1350, extremely weak buying, bearish divergence signal here. So what that's telling me is that this move needs less and less kind of buying volume to kind of push it through. You need the volume in order to kind of keep the move going, and as soon as the volume kind of dries up, the last buyer has bought, the thing will roll over. This particular push up, I think, is quite important. For me, that's almost like last roll of the dice. It's kind of the last kind of push up that we got into these highs. You know, how far did it actually push us? And up at these highs I was talking about, we had these 3 series of bars right at the highs up there with extremely high average trade size, and that was kind of professional profit taking there. So they were using that kind of last kind of pulse in volume to kind of get out there. So we're at this critical juncture where we've got kind of diminishing momentum. Better X trend line is just using that kind of momentum volume, that exhaustion buying and selling volume to trail a stop, and talked about this a couple of days ago. So this has now trailed a stop underneath this last low. So we had, you know, this signaled quite nicely, kind of keeping in this uptrend since September last year. Had a little bit of a downtrend kind of push in, but you know, we pushed to new highs on less and less kind of buying volume, and we've now kind of got this support level here at 28.75, extremely critical level. If we start to break below that, you know, we're in real trouble in terms of the market falling off. And then if you prefer kind of your trend lines to see that pattern, here's what's happening on the 135-minute chart. So there's 3 of these bars on a daily chart of the E-mini. And we've come into this congestion zone. Now this is kind of the third play into this. The first time we kind of broke initially above it, came back into it, this white bar, kind of broke above it into a larger kind of congestion zone. Kind of, we had these trend lines that were just at an apex here, and as you can see, the lines that they're drawing at, you know, 1335 and 1350, or 1330 and 1350, absolutely key. Now the other kind of interesting kind of aspect to this pattern is this potentially could be an island reversal, and this island reversal set up like this. So this is a breakaway gap that we got back in April 20th here. Market was kind of gapped up, and we kind of ran away to the upside. And it's created, with this kind of congestion zone, this little island that sticks out from the rest of the activity here. And sometimes these end badly with a break below this support. And so Monday's activity, if on the Sunday evening we start to kind of sell off hard, Monday's activity, we could be, let's say we kind of open trade in the 1320s. That would be kind of a breakaway move, and we start moving to the downside, and that leaves this entire pattern kind of sticking out like a sore thumb on its own, and that's known as an island reversal. If we get that, you know, if we break through 1350, keep on moving, you know, this is just a consolidation pattern and a continuation of the uptrend, but it's potentially setting up as an island reversal here. The importance of an island reversal is what it does is it kind of traps traders into positions. So we had this kind of gap up move. We'll have traders that have followed that didn't get into the move here. They followed and got into the move here, almost like buying, you know, silver above 35 or 45, $40. Those traders are now trapped in at those high levels. Psychologically, you get them kind of really rattled with a gap starting off, kind of a move to the downside, and they're like deers in a headlight. They're kind of stuck. They're bought in at these elevated levels. The move to the downside is so extreme, they're kind of frozen into activity, and they think, well, I'll just hold, you know, to the grim end because this will come back and everybody's telling me that everything's going well. And they get trapped into that move until eventually they get, you know, a margin call or get kind of busted out of their positions or whatever it might be. But it's quite a strong psychological kind of trap for people to be in. So just be aware of that's you know, a potential kind of pattern that's kind of lining up. And then lastly on these charts, just want to show you what my hypothesis was. Now I've not changed a bar on this chart since I put this up back here in March, and you know, we rallied into this high quite nicely, sold off here. This is this kind of gap up where really I was kind of taken by surprise. I had a bad week's trading into these new highs just because you know, psychologically I couldn't handle it. And we've kind of come into this kind of congestion zone about the same kind of time that I thought we might kind of top out. Now, again, here I was kind of assuming that we would maybe kind of make a lower high and then kind of break a support level here and move into a downtrend. But in fact, what we've got is almost like a stronger psychological pattern where we've made new highs, And in this instance, psychologically, people are saying, well, because we've made new highs, therefore game on. We're going to break to the upside and kind of keep going. Whereas in fact, that's just an opportunity where the professionals, just use this opportunity to get out on those highs. And as I said, those extra high average trade size days happen right up here on those highs leading into that high. So just be aware of that's kind of, although we're kind of making higher highs here, that actually can be a weaker pattern kind of going forward. So that's potentially what's kind of going on here. Now 40,500 tip bar chart again, so we're kind of just going down a little bit into the layers here where we start to understand. So on these type of charts we've got 6 to 8 to 10 kind of bars on a day based on depending on how much activity that's kind of going on. And you can see into that Bin Laden high at 1372, bang up here, we had all these bearish divergence signals, all these blue professional bars, high average trade size kind of coming into those highs there. Really extreme kind of activity, and we kind of sold off from there. And we didn't find a bottom until we had exhaustion selling on the downside, and we kind of bounced from there. You can see the first bounce that we had up here, blue professional bar, stopping volume, profit taking and so on, extremely weak buying going on here. We kind of crack on through, back testing into the 35s and 30s down here, exhaustion selling on the Wednesday down here, and we rallied from there. Now Thursday's rally took us up to 1350s again, but you can see this amount of buying here. It's less than we've had at the peak, but it's more than we've had over the last kind of pushes back up. And with that activity, we couldn't crack up through 1350. We couldn't make it up through this high. We couldn't test up into the 60s. And for me, that's like a last roll of the dice. That's the last opportunities that the professionals had to kind of push this thing higher and get the move going, and we've kind of settled back down. Now we have settled back down. We're going to make a cyclical support probably tomorrow on this time frame, and we have got bullish divergence down here, potentially because we've had this exhaustion selling and that bullish divergence and a support level coming in. Potentially we could see a rally from here, but we're really elevated in terms of levels. This move has lasted a long time. We've seen less and less buying activity kind of coming into those highs, and we've seen kind of professional profit taking. Up here we see a little blue professional bar at the end of Thursday, and then a Rambo pattern, all these amateur activity kind of at the highs in the overnight session kind of here at 1350, and we've not seen kind of blue professional bars to stop this move kind of going down. So for me, I just don't see the buying volume to kind of to move it to new highs. But with all of these things, I mean, I've been surprised by the moves to the upside, because I just don't see fundamentally the strength in the economy to do that. I definitely think there is some kind of market manipulation, either not directly by the Fed, but probably through agents of the Fed in order to kind of keep the thing going. We know that Bernanke views the level of the S&P as a key psychological kind of lever that he can use to control the psychology of the country, the US. You could well see kind of the move being pushed to new highs in order to keep that going. But at some point, they run out of bullets. We know QE2's kind of ending, and all the players have been signaled that they want the Fed effectively wants you to move out of risky assets and move into bonds. So I can see all kinds of backdrop reasons why the market continue to rally, or that they could want the market to continue to rally. But equally on the other side, there's lots of reasons why it's going to kind of fall off. So we're at a knife edge, absolute knife edge here at 1330. So watch out. I'm going to be watching the activity on the open the overnight open on this Sunday very, very carefully. Now let me show you a kind of an intraday setup that we had. I wasn't going to trade Friday because after Thursday's activity I thought we'd just kind of crack on through and just keep on breaking up. Let me show you, these end of trend signals over the last few days. So on the 4,500 tip bar chart, which is the time frame I use for trend direction. So this was coming into the high. I think this was on the Wednesday evening. So this is the overnight session setting that trade up. We had an end of trend warning signal here. We'd had our exhaustion buying, bearish divergence, bang, we kind of roll over. And then coming into Thursday's activity, we have a pullback, dirty end of trend, because we kind of broke this pullback level. Dirty end of trend, second cyclical turn after an exhaustion selling signal and bullish divergence, bang. We take off onto Thursday's activity. And then leading into Friday, I was talking about this kind of end of trend leading into Friday's activity, and there we actually get it printed in the after hours. We broke above it, but it's all amateur activity up here with Rambo patterns, stopping volume and so on. Bearish divergence, extremely weak buying here, and we roll over. And then on this time frame, we started to roll over into our downtrend right at the get-go, right at the beginning. It kind of took me by surprise. I wasn't ready for this, and so I was just kind of watching the market. I thought maybe, we might have seen the market kind of rallying on after all the activity in the commodities markets, seeing support coming in there. But then we have this lovely little setup, and I talk about this where support becomes resistance and vice versa, resistance becomes support. So we've broken through here at these levels. We come back up to test on the 4500 tip bar chart. So support becomes resistance, and there we go. All this amateur activity, buying the new highs here with a Rambo pattern. Potential reversal, the amateurs are trying to buy this breakout, reversal of that trade, bang, we set off to the downside. Exhaustion selling at this point gets this move going. We come back into a pullback and a downtrend, and we'll have an end of trend kind of, or a dirty end of trend kind of printed on this time frame on the 4500 tip bar chart. So again, on this time frame we've got support at this level. On Sunday they really need to get this thing going to hold 1330. That's kind of the line in the sand. If they can't get it going at that point, then we're going to drop to the downside. But this setup was a beauty. I kind of got short here. I got short at 44.75, a little bit early into this move. But let me just back it down a couple of time frames. So beginning of the day here, red vertical dotted line. We had our end of trend here with exhaustion selling at this point and bullish divergence, but because the exhaustion selling happened at the end of trend signal, we were going to get we had to wait for a second cyclical turn for an end of trend. So I was playing this rollover level at this point here, hoping just to see a little bit of a pullback, a final kind of second cyclical turn after end of trend. Went against me initially here, a little bit of worry here with a little bit of a flush signal here, but as you can see the whole move was being led by the amateurs, amateur up bars and bearish divergence. At this point we kind of roll over, so I took 2.25 points of heat on the trade, but kind of held it and then got out at 41.25. Now I got out way too early because we had all these blue professional bars kind of coming in at this point here, and took out 3.5 points on that trade. Just going to show you the setup, continue on the setup before the end of the move. So on the 500 tip bar chart you can see we came into those lows initially with an end of trend here. All these blue professional bars kind of come in at 41, we rally from there, but the rally that we had ended with an end of trend warning signal here. We had blue professional bars coming in the first time. Thought it was kind of being led by the amateurs here, but we had a couple more blue professional bars to come into those highs before it finally just kind of rolled over and just went the other way. Now just backing back on the 1500 tip bar chart, just want to talk to these. Got a question. This was a good one from Justin. Quick question about Better Pro Am indicator. During Friday's trading using the 1500 tip bar chart, he's actually using Ninja Traders. This is 11 a.m. Eastern, so 10 a.m. Central. We had 7 consecutive professional bars in the middle of the down cycle. Can you comment on this, as it looked to be an anomaly? And the indicators are fabulous. Nice comment there from Justin. Here's the anomaly that Justin's talking about here. I saw those, and I'll tag on the day trades. I recorded this during the activity there. I thought that looked very odd. It was almost like not that it looked odd as I was looking at it. It looked like exhaustion selling that we got on the 1500 tip bar chart, and that the market would rally from there. However, when you look at the move in kind of full context here, it broke through the support and ended up with kind of end of trend kind of down here. After seeing the move go down into the 30s. And for me now, looking back at that, I think that was kind of professional activity falling through the ice. They were kind of getting on board this move as it was breaking 1340 as psychologically a really kind of important level. We never saw anything like that level later in the day. If we go up, we can also see it on the 4500 tip bar chart. It's this breakdown here. So we're kind of breaking to new lows, and the professionals take it down. Large range bars, professional bars here, they were kind of kind of falling through the ice at that point. So for me, that just kind of adds more kind of evidence that I think psychologically the professionals really saw these kind of levels. When 1350 didn't get taken to the upside, then 1340 on the downside became a kind of a critical level. So there we go, a lot of me talking today. Hope you traded well on Friday, and just be aware we're at this kind of absolute knife edge on the market with this support level kind of printed and this potential kind of island reversal kind of going forward. So now if it keeps on going, if we break 1350, keep on going to the highs, again, I won't be surprised. I think there's a lot of people that want to keep us in the game and want to keep this thing going to the upside. But 1330 on the downside, moving to the downside is absolutely critical here. Second cyclical turn after end of trend. So enjoy your weekend. A little bit of sunshine and daffodils from me as per normal, and looking forward to next week's trade. Just got short at 44.75, and what is it? It's 9:31. Wasn't planning on trading today. Just been watching it all morning. Actually sold off most of the morning. We kind of bounced 20 minutes ago. And this bounce we had after exhaustion selling on the downside. But we had no blue professional bars kind of coming on the 1500 tip bar chart down here at the lows. And this move back up to kind of test, support becomes resistance here. We got a cyclical kind of downswing on the 1500 tip bar chart, end of trend here on the 500. The move up here has all been this last kind of push up being led by the amateurs. We have blue professional bars kind of taking profits above 45, kind of just earlier on. All the amateur bars kind of up here at the highs. Flash signal here. It's not kind of pointing in the right direction, so I'm going to be careful about this. But another amateur bar kind of printing on 1500 tip bar chart here. I'm expecting is this to kind of roll over and test the lows. The exhaustion selling signal that we had was at the end of trend, not kind of prior to the end of trend. So we should get another kind of cyclical swing in here and test back down to a second cyclical turn after end of trend. Anyway, so just short 44.75. Let's see what happens next. Okay, a couple of minutes later, we just pushed up through 46. But this last kind of push up, a little professional up bar here, we're kind of closing now or coming below the lows of that bar, and on the 1500 tip bar chart you can see it was an amateur up bar here, forming a Rambo pattern up there. So we're still under this support becomes resistance kind of level on 4500, and we're kind of coming back down. So still think there's a chance we're going to go lower, but this is the thing that's got me here. This flush signal's not good. That just shows that we actually had quite a lot of selling on this kind of downdraft here, and we're kind of reacting as a result of that selling there. So still holding short 44.75. A couple of minutes later we finally get some bearish divergence signals. So we've had one on the 500 tip bar chart and one on the 1500 tip bar chart. Really shouldn't be trading, taking an entry without confirmation like that, because that's really what kind of sets these moves off, is kind of some kind of divergence pattern here. So we've got kind of Rambo on 15, Rambo on 4500 tip bar chart. Support becomes resistance. Still holding this short, taking a little bit of heat. Took a little bit of heat up here at 47, but I think it should roll over. Let's kind of continue to watch and wait. I just came out at 41.25. Just got a little bit freaked out there. Target was at 40.75. Did touch there, but didn't get taken out, and I just kind of hit the buy button. The reason for getting out is we've now had blue professional bars kind of come in and exhaustion selling, and it's a pro signal exit here. So there we go. We'll go to 40.50. Yeah, so I would have been taken out, but sometimes just a little bit trigger happy. Anyway, so what's that? That's 3.5. So that's not bad. Not sure where the market's going to go, but interesting. On the 1500 tip bar chart, just kind of widen this up. So the reason for getting short, 3 reasons. First of all, we had exhaustion selling at the end of trend, so the second cyclical turn is the one that we need to wait for in order for a change in trend. So that, which means this short signal kind of at this cyclical resistance level is going to be a kind of higher probability trade. Sometimes they're kind of weak patterns, sometimes they're stronger. Second reason, no blue professional bars kind of down here. Now that's exhaustion selling. Blue professional bars kind of coming in That's what I mean, that's a little bit extreme in terms of the number of blue professional bars kind of come in here, but we had none here. And then the third reason was this push back up to test this resistance level was all amateur up bars, finishing off with a Rambo pattern and a bearish divergence signal. I was in too early. I was kind of getting in at just this test, I think, here. Kind of went up through there. Just note to self, need to wait for bearish divergence signals before getting in. But anyway, held it through a couple of points of heat and eventually kind of made it out. So that's why that one kind of worked out nicely. Be interesting to see where we go from now. This is quite extreme kind of selling here. It's really extreme reading on the 4500 2-bar chart. So it's before 11 a.m. We potentially could see a reversal today, but who knows? I'll be interested to see how the charts kind of wind up for the end of the day. Hope your trading went well.